Let's talk about real estate. U.S. existing home sales dropping 1.3% in January compared to the previous month. But on a year-over-year basis, sales surged 9.6%. Joining us now is Tim Rood, Managing Director at SitusAMC and a former executive at Fannie Mae. And Tim, thanks for joining me today. When you take a look at that number that we got out today, does that concern you at all, or is it more just in terms of a seasonal drop?
Hey, Sean, no, I'm not concerned. Quite frankly, I saw it as a little bit of a head fake. There's always some scratchiness in those numbers on a month-to-month basis. So if you look at the year-over-year numbers, it's unmistakable that the existing home market is still on fire and it's got plenty of room to run. And it's really just the fundamentals about supply and demand. If you think about the inventory that we have right now is basically at a 30-year low. That by itself is interesting, but then when you figure out that over the last 30 years we've added 80 million people to that, that's a substantial difference in terms of the amount of demand in search of product that really doesn't exist.
Tim, what do you think about the housing market right now, just in terms of where it stands? There's lots of fears that we will see a slowdown in the U.S. economy. Are you at all seeing that translate over to housing, just in terms of people being a little bit more hesitant to buy?
I don't see it. I mean, if you ask renters, it's interesting. Aspirationally, particularly millennials, since they really are the tailwind that's driving demand for homeownership. Aspirationally, they're just like every other generation, where they see the opportunity, they want to buy a house. You think about the amount of these millennials that are coming online. Right now, you've got about 5 million that are turning 30 in 2020, which is massive. The median age for millennials is about 34, yet the average buying age is around 35. I mean, man, we've got so much pent-up demand. It's hard to see anything but a positive outcome in the context of home price appreciation. But at the same time, you've had so much appreciation over the last 8 years. If it wasn't for interest rates, man, we'd be in a world of hurt because nobody could afford these things.
Well, Tim, that's what I want to ask you about, just in terms of the fact that there's a lot of first-time buyers out there. They're struggling to afford homes. The fact that we keep seeing home prices continue to rise. You just had that latest Case-Shiller index. It was another month, or another year, I should really say, of gains. When you take a look at that, is the housing market pricing out some of these millennials who want to buy at this point?
So it's interesting. If you ask typical renters, I think it's about 85% of renters, you ask them, is this the most economical decision for you versus renting, versus owning? So 85% say absolutely. But in reality, if you think about renters, 40% of them are spending over a third of their income on their rent versus home ownership. About 20% are spending about a third or more of their income on their, living in their place. So I think that there's an education gap just in terms of what the opportunity is from a home ownership perspective. And the big picture is, I think that folks quickly pick up on, is the fact that homeowners have an average net worth of over $200,000 and renters have an average net worth of less than $5,000. So, I mean, sooner or later, people are going to get religion that that's really the best chance or the best opportunity for wealth creation for this new generation.
Tim, how big of a headwind, how big of a challenge do you think this is for the housing market?
Well, I mean, the housing market, I think the biggest issue that we have right now is, of course, the inventory problem. And you have an inventory problem because the average tenure, that's how long people stay in a house, has actually doubled over since the crisis. So leading up to the crisis, average family or household stayed in a home for about 5 years. Now they're staying 12 years. That's really exacerbating this inventory crisis. And it's only been until the last year or so that builders have really kind of figured out or have compelled themselves enough, the market's compelled builders enough to actually get out and start building entry-level homes. Right now it's because of labor shortages, land shortages, cost to build. All of those things have really deterred builders from building. Now you're seeing new home construction up about 23% on a year-over-year basis. If they can get their act together and start building where people want them at a price point that people need them to build at, then I think that we should have a much softer landing, if you will, in the housing market.
Hey, Tim, there was one interesting statistic from a recent Lending Tree survey, and it was just talking about how often people move now, and that, in fact, has been decreasing now. When you take a look at the rates in 2019, it was just at 9.7% compared to around 12% in 2008. When you talk about how that could be having some sort of impact on the housing market, how do you see that playing out?
It's a big problem. I mean, I don't think it's anything that anyone really anticipated. We all thought that, for example, that the baby boomers would eventually move out of their suburban houses, move into a city, move to Florida or something like that. And it's seeing that now they really just want to age in place, and that's bearing out in the numbers. That's what's drawing out some of the tenure. One of the other issues is despite the fact that home prices have appreciated about 50% from the trough, you still have a lot of pockets of the country, about 20 million homeowners that really still see minimal or no equity, so that they can't really move out of their properties. Another group of folks are really seeing that, yeah, I'd like to move, there's an opportunity, but where the heck do I move? That gets back to that catch-22. I'd move if there was some inventory, but there's no inventory for me to buy. And the fourth issue really has to do with multi-generational housing, where you have this sandwich generation, which I hate to think, but I'm probably one of them, where you have the parents that are moving back in with the kids, and you have the kids moving back in from college to move with the parents. So I'm getting killed here financially, and that also is kind of driving this additional tenure where people just can't really rationalize the way through to selling and adding that inventory back to the market.
Tim, when you take a look at the housing markets really just across the country, what areas of the country are the hottest right now?
So it seems like there was a great study that was recently done that kind of looked at the top 50 metropolitan areas from a rental versus an ownership perspective. It seems to be that the Midwest and the South are the best places from an affordability standpoint to own, whereas on the West Coast and in the Mid-Atlantic area, those seem to be in the East Coast. Those seem to be the places that you'd want to rent just because of the high property values. It seems like builders are also looking at these kind of these expensive coastal areas, and they're moving inland to find cheaper land in areas where it's more of the entry-level home buyer, these exurbs that are not necessarily the prime locations, but are really adjacent to the major cities. These are the areas that are going to be affordable for first-time home buyers. They're desirable from a weather and from a walkable, drivable amenities kind of standpoint. And these are areas that generally have strong economic fundamentals that ultimately pull employment opportunities to those areas.
All right, Tim Rood, thanks for joining me today.
You bet. Thanks.